Welcome, trade spooners, to today's pick. Let's get right into it and take a look at the pick for January 24th. We're taking a look at short family dollar stores. FDO is the ticker symbol. Let's scroll down and take a look at the risk-reward rating here from Tradespoon, and our proprietary analysis has it as a 3 on the low end of the curve, and we have the value momentum as a 3 as well. Again, on the low end of the curve for that score here by our Tradespoon analysis. Taking a look at the price action in Family Dollar, we're going to see that the closing price is $64.27 today. That's off the highs of $75.29, but above the 52-week low of $54.06. We're seeing a big spike in implied volatility, and as a matter of fact, if we go take a look at the volatility chart, you can see that green line right here. It's just right off of the highs, and as a matter of fact, other than the spike that we saw back earlier this year, this has really come off the lows hard and recently really popped in January, and we'll take a look at why that potentially could be happening. We're seeing the return on capital for the strategies that we're looking to implement on the options side. That return on capital is about 48%, and the probability of success is coming in at around 60%. We're calculating an estimated move around $4.20. That is a big estimated move. And it could be explained by two reasons. One is the increase in implied volatility. In other words, that increase in expectation of potential movement. But this expected move is not biased to either bullish or bearishness. It's just an expectation of potential movement either up or down. The option strategies that we're going to look at are going to expire in February. 2/22 is the expiration date. Keep that in mind, option strategists. So let's take a look at the picks. We're looking to sell stock short. FDO is the ticker symbol again. And we're going to look to have an entry of 64.27 or better. We're going to put in for risk management a target gain of $6.20. So we're going to put a buy limit, good till cancel, at around $58 and some change for those of you that are going to be putting that buy limit to take profits. Our max risk is going to be $6.20 higher than our entry price, which is going to get us out at a buy stop of around $70 and change. Again, use prudent size management, 3 to 5% of your either cash available or your percentage buying power. And you're going to have both these risk management orders working good till cancel, and you should use a contingent feature called one canceled other. Now, you option strategists, we're looking to buy the February $65 puts. We want to put a limit price of $2.80 or better, and our target gain is if the stock goes down and the option is trading at $2.80 higher than what our entry price is. So basically, that's going to get us out around $5 and some change. So you would put a sell limit, good till cancel, of around $5 and some change. Our max risk is going to be the total debit that we pay per contract, so $2.80 or $280 per contract. Again, use prudent size management, no more than 5, and for you really small accounts, maybe 10, but do not extend past that 10%. That you might be putting yourself at too much risk. The option spread strategy, we're going to look to sell the $65 call, and we're going to collect $2.15. Now, we're going to buy some protection above that, $2.50 above that, with a strike price of $67.50. So we're going to buy the $67.50 calls for $1.30. That means our net credit for this $2.50 call spread, 65 minus 67.5, is 85 cents. That's our max profit. Our risk is the difference between the strike prices minus the premium received. So your risk is around $1.60 and some change. You're going to put a buy stop, or you're going to put let's say a watch list alert, where if the spread is actually trading at $1.65 or higher, you want to close that trade. That's your maximum risk. And again, if you've never traded these strategies before, you can always use our proprietary Tradespoon virtual trade. Now let's scroll down, and as you can see from the chart analysis, the stock has actually been in a pretty decent consolidation other than this day right here. And so and you see that the bias is starting to potentially look like it might be to the downside, but we're going to keep an eye on it. The other thing is that you want to keep an eye on the key stock events, and specifically not only the technical and fundamental events, but you also want to see if there's any earnings. And we don't have anything listed here in the key stock events, but keep an eye in this section to see if you see any earnings data or any other information in this sector that could be indicating why vol has popped. And as always, you could take a look at the news and commentary, which could also help in explaining why implied volatility or expectation of potential movement has increased so much in the options market. And as always, if you need any help, you can email us at info@tradespoon.com. And keep an eye on the recent picks, on recent daily picks, and you can see that today's pick right here, Family Dollar Stores. You can also recheck any of the older videos. And if you see a check mark by any one of these ideas, these strategies, that's just indicating that this has a higher probability of success with the current market conditions. And as always, you can look at the performance page. Well, that is today's pick for January 24th, going short Family Dollar. Well, we'll look forward to seeing you tomorrow, and have a great trading day.